Hello, my name is Ben Leibovich. I bring this video to you as part of my financial literacy and real estate investment blog, JustAskBenWhy.com, where we teach you how to plan for and to take action to achieve financial freedom. The subject for today's conversation is capital gains versus cash flow. I am going to give you some numbers, some plausible scenarios that break down, based on my experience, pretty close to what the numbers on the board are. But at the end, I will tell you that this conversation is less about the numbers and more about you. So here we go. First of all, capital gains. What is capital gains? Well, capital gains is a windfall profit from selling your asset. You buy an asset with the intention of selling it. When you sell it, you generate a profit. This is capital gains. Okay? Now, buy a house for $35,000. Remodel it for $15,000. Sell it for $70,000, generating a $20,000 profit. Pay the real estate commissions associated with it, and further, pay income tax on it. Now, even though I call it capital gains comes in two variations: long-term gains and short-term gains. Long-term gains are anything over 12 months. The idea in this kind of business is that you're not holding your property for 12 months. You're selling it in 3 or 4 months if you think you can do that. The implication here, however, is that long-term capital gains right now are 15%, which is good. Short-term, however, is much higher, and you could be classified this income, if you are doing 3, 4, 5 of these flips a year, then it's considered a business. It's considered your job. It becomes earned income. As such, you're going to give a third of it. I have $5,000 here, which is a little less than a third. But you'll give a whole lot of it away to the IRS. Okay? So at the end, $20,000 profit minus real estate commissions minus $5,000, you're leaving with $11,000 of income. I have it in the red because, like, red meat. Everybody wants their money now, fast. 3, 4 months, there it is. Okay? If you live in a part of the country where properties are just more expensive, well, you know, you might have to pay $350 to buy it. You might have to spend $150 to fix it. You're going to be selling it, though, for $700, right? So the proportions are all the same. You can do this any place. The numbers get bigger, but the proportions work the same. Okay? But that's that business. Let's talk about cash flow now. You buy the same property for $35,000. You remodel this property for $15,000, and you rent it out for a cash flow monthly of $200 a month. That's income minus expense, rent minus all of the holding costs, including your fix-up costs, maintenance costs, vacancy factor, all of that. Okay, $2,400 a year, $200 a month, $2,400 a year. This is considered passive income. As such, you are going to be taxed much less. I put $400 in here. So let's say you have $2,000 a year left. So here's the conversation. Do you want to generate $11,000 this way? Or would you rather generate $2,000 this way? This is more money. What do you want to do? That's a question to you. Personally, here's how I look at this. Reinventing the wheel. Right here. Because when you bought a house, hopefully you bought it right. Hopefully you didn't miss any big repair items when you bought it that are going to end up costing you much more than you planned on. Hopefully the market is still supports, when you're ready to sell, supports selling it for what you need to sell it for to generate a profit. Okay? A lot of unknowns, so to speak. But then when you sold it, you made this money. Now what? Now you have to go find another house. You have to buy it right again. You have to hope you didn't miss anything on repairs. You have to hope you get repairs done in timely fashion, and the list goes on and on and on. A lot of work. Here, you bought a house. Yeah, it's only $2,000 a month. But the next year, it's also going to be $2,000 a month. Year after that is going to be $2,000 a month. Once I've done this, I am dealing with what to me is like known commodity. It's known commodity. There's no unknowns. I get to know my property. I know what the quirks are. I know how to preempt problems in this property in terms of maintenance, and I take care of it proactively. Okay? So how do you decide? What do you do? You can make money both ways, but what do you do? Well, this is an interesting conversation, and this is where it really comes back to you, who you are. A very interesting analogy was given in a book entitled, what was it called? Who Took My Money, I think, by Robert Kiyosaki and Sharon Lechter. They're the authors of Rich Dad series. Okay, it's an analogy of dairy farmer versus a rancher. They both deal in the same commodity, livestock. They buy a calf. They put a lot of effort, a lot of energy, a lot of money into raising that to become a cow. But the dairy farmer then keeps the cow and milks it little by little for many years to come, while the rancher slaughters the cow and sells the beef for a windfall profit. When he sells that beef, when he kills the asset, he then has to go find another calf. He has to hope that this calf is as good. Okay? He has to hope that it grows as well and that he can repeat the process over again. The dairy farmer, however, he can buy more calves and raise more calves, but he's got some income coming in. It's a smaller stream of revenue, but it's a consistent stream of revenue. So the question is, who are you? That's the question Robert Kiyosaki asked. That's the question I ask. I live right here. I'm a dairy farmer. I want to find a good asset, and then I want to milk it. I don't want to slaughter it. I very seldom sell. Most of everything I do is I hold. I buy to hold. This is my personality. I don't want to reinvent the wheel. I don't want to play this high-intensity game every day of my life. That's not what I want to do. But more than not wanting to do it, I recognize how you can make a lot of money here. But I'm in search of something I call financial freedom. What is financial freedom? Ability to make more money than the cost of living passively. Money that I didn't have to work for. Money maybe that I had to manage and be smart about, but not money that I had to actually perform work. Be there, punch the clock, be there all the time, and repeat the process time and time again. That's not the life I'm looking for. I'm looking for passive cash flow. Passive cash flow lives on this side. So I am much more comfortable on this side. Okay? Where are you? What path do you want to take? That's up for you to decide. Up to you, I should say, to decide. Thank you for listening. I hope that this was educational. You can follow me at www.JustAskBenWhy.com. And you can link up with me on LinkedIn, Twitter, and YouTube, and Facebook at /JustAskBen. Thank you. I'll speak to you next time. Goodbye.